Let's get across the market open now. Jessica Amir joining us from Moo. Jess, great to have you back on the show on this Tuesday. Of course, the big news overnight is that, well, we've got a trade truce essentially, haven't we, with both US and China backing down on their tariffs.
Yes, absolutely. Everyone's a winner. It's been a very swift charge up and very aggressive rally overnight. So it's pretty telling. And I think now this set of circumstances basically suggests that the worst is over and more green or blue sky is ahead. I think what's really interesting, though, just looking at the notes from what actually happened overnight, this 90-day tariff truce is a reduction. It's a reduction while talks are underway. But yeah, I do believe it is a green light for equities to continue to rally up. And by the way, Andrew, if you have a look at the options markets for the NASDAQ 100 and the S&P 500, they're suggesting more highs ahead. 21,000 points is what the NASDAQ 100 is now approaching. Bets are basically suggesting that we're going to be back at 21,000 soon. So I don't know, in case people at home didn't catch these details, the US will reduce most levies on Chinese imports from 145% right down to 30%. China also sweetening the deal as well, dropping duties on US goods from 125 to 10%. So everyone's a winner, and that's why we saw stocks that are really focused on the China consumer and indeed those NASDAQ businesses that we've been speaking about that make a lot of their money from China. They saw the most hot sauce and love overnight. And I do believe this rally will continue unless we see Trump strike down and increase tariffs. He said he could, but he did say that tariffs probably won't go back to 145%. So risk on rally, positive day ahead for the Aussie market.
Well, just before we get to the Aussie market, US, which stocks are you seeing as having the most upside, Jess?
So it was really interesting to see, look, again, just thinking about the stocks in the NASDAQ 100 that make most of their money from the US, we've got to think about who on earth they are. And it's a rhetorical question. I'll answer it first. So Tesla's obviously the mover and the shaker. So what happened overnight was Tesla broke out to the upside, very aggressive move by Tesla. Of course, they make 21% of their money from China, Andrew. So this is going to be a game changer, and that's why their shares jumped 6.75% overnight. Leveraged ETFs in China also charging up almost 14% in one night. Now, what's happening is this China-US trade truce is also coming at a time when the factors are there for Tesla to continue to finally break out higher. So the robo-taxi is expected to launch next month in June. That's pretty exciting. And this is why we're seeing the technical indicators suggesting that more upside could be ahead. But to your question, what other businesses? Well, on the weekend, I love to wear Lululemon. I don't know about you and your family. But Lululemon's very popular in China and with the Chinese consumer globally. And there's a good reason why Lululemon shares jumped almost 9% overnight, Andrew. Of course, again, the notion is sweeter sales are ahead for Lulu now that there's less China tariffs. What about other China-facing stocks? Indeed, the ones that are listed in the US, such as ADRs. So Temu, that's the parent, or rather PDD, Pinot Dois, is the parent of Temu. That surged 6.1%. The takeaway here, expect hot sauce from China-facing stocks, those that are also listed in the US, but also back home as well. But I think there's a lot to be said about Tesla and Lululemon charging overnight.
What about locally then, Jess? Look, we are expecting obviously to follow those global markets higher this morning. Stocks specifically though, particularly with the China focus, which stocks are you focused on?
So that's a great question. I think the $1 million question also might we might insert the additive about the RBA next week. So I believe that equities are now on a bullish run up here, but thinking and adding in that China bow, what can we expect that might do really well now that we've got this sweeter deal? So when you have a look at the makeup of the Aussie market, the top 20 companies, look, I'm thinking Fortescue Metals, a no-brainer. Fortescue Metals is making over 90% of their money straight from China. I do love the fact that the iron ore price has finally touched $100. It didn't stay above $100, but the seaborne iron ore price, that's how Fortescue makes their money. And the iron ore price cracked over $100 initially for the first time in about 6 weeks, Andrew. So obviously the market is very positive and believes that this runway for China-facing stocks will continue. So FMG, definitely a stock that you should be keeping on your radar. What about other stocks that are really pegged to the Chinese consumer? Well, I think we can't forget A2 Milk. A2 Milk has made a huge turnaround. It's made a big shift. Yes, the Daigou is dead, but it's not about the Daigou anymore. So A2 Milk making a big chunk of their money from China, some 20%. So I do believe that this company should be on your radars. And their sales have seen a marketed turnaround. Their outlook was recently upgraded. So A2 Milk should definitely be one to watch.
And Jess, look, given it's all risk on at the moment, obviously we're seeing those safe havens come off, gold in particular. So how are you playing that at the moment?
Well, personally, I'm still in gold. That's for my self-managed super fund. I will say that's my disclaimer. Yeah, so the risk off mood means that defensive assets are a bit on the nose, aren't they? So that's why we've seen gold tumble down 3%. But overnight, I did hear from one fund manager who's actually now increased his upside for gold and now sees that gold could get to $5,000. So then you've got to ask, would you be expecting the US dollar to be pressured lower? So the reason that the gold is facing some pressure today, Andrew, is because we've got the American trade. It's all about pro-America, and pro-America means buying more US goods. So the US dollar's higher and gold is down like a doozy. But I don't think that this narrative is going to stay thick and fast for some time. Obviously, again, bring in the depreciation and the idea of the US dollar, the devaluation of that, and also the fact that we do have exploding debt levels in the US and globally as well. That does mean that gold can maintain its strong foothold at these levels. But you would be expecting a lot of profit taking in gold, without a doubt. But I would be keeping an eye on the US dollar, expecting that to fall at some point, and that's when gold will make another run for it and push back up. Again, I think we've got to think about every time that that gold rallies, it's on the back of a credit crunch. And we still have, don't forget, Janet Yellen saying the US in January was going to miss their debt repayments. Trump has not been speaking about this, but I do think that someone will start to talk about it very soon. And as soon as that happens, gold is going to make another run up for it for another record.